Welcome to question and answer session 13. I am Pratap here. Today is 28th May 2024. So before we get into the Q&A session, a small announcement please. If this is your first visit to our channel, please understand we are providing complete free training on supply demand zone price action. All the training lessons are available at our NeoStock YouTube channel. So at our channel, click on this community tab, then you will get an access to this post. This post is having a YouTube playlist link that will take you to all the training videos. You just click on this link. I'm clicking on this link. Now we are into supply demand zone price action course playlist. So in this playlist, you have all the training lessons are available. You just need to scroll down to the bottom of this page. Here, starting from lesson 1.1, you have all the training lessons are available in an order. So please go through all these lessons one by one and strengthen your skills related to supply demand zone price action. I have also provided the link to our Telegram channel in this YouTube video description. Please join in the channel. It will be helpful to you. Each time when we release a new YouTube video or any other important updates, we will provide in the channel. Now let's get into the Q&A session. Let's look into the first question. And this question is about when do we use this report? Which report? Weekly report. Actually, this is a question put in the weekly report because every week we are releasing a weekly report, supply demand zone weekly report. So the question is, weekly EMA confluence is fine, but those near inside pierced weekly demand zones, why do we use? What is the purpose? Actually, there is a strategy is built based on stocks inside the weekly zones or monthly zones. And you are yet to learn that strategy anyway. That will be covered during your phase 3 training program. Even before we get into that, let me explain you how these zones, these reports will be useful, especially stocks closed inside weekly demand zone. Then why near to the zone will be available? Because these stocks are soon entering into the zone. That's why whatever the strategy you are going to apply, you will be keeping these stocks near the zones, you will keep them in your watch list until these stocks are entering into the zone. Once they are entering into the zone, whatever the example I am going to show you, you will get clarity with that. Pierced zones purpose is different. I already explained the purpose of pierced zones in a special video. I think it is available in a playlist. Anyway, I will show you that also. But your strategy, main strategy is built based on stocks closed inside the weekly zone. And also every month also we are publishing one report, monthly stocks. The same strategy is also applicable in monthly reports also, but I am publishing only once in a month. So how these stocks inside the zone will be useful? For that, I am taking the report which I published in our last video, in the weekly video. The most recent weekly video when I published on 21st May 2024. This was the date. This was not 21st May is not the date. It was the candle date. The candle closing. I think that is on. I have published this report on. I'm sorry. On 25th or 26th. I think 25th or 26th. I published this report. And in this report we have indices, and this is the stock, first stock. Let us take this ABC Capital as an example. Currently price is closed inside the weekly supply zone. Weekly supply zone means this stock will be useful for short trades. But how we will be making use of this? That I will explain by drawing the weekly zone first, and then how some people are using these strategies. Especially people who are having experience in supply demand zone for the last 5 years or 6 years, they will be using this strategy. Even some of the people who recently learned the courses and who learned this strategy also probably using this report. So that is the reason why every week I am publishing to support the people who are aware of this strategy. So ABC Capital, when the supply zone was created on 22nd of March 2024, one base candle, and after that a leg out candle. 22nd March 2024. Remember the leg-in date. So here, okay, let me move on to the weekly time frame. This is Nifty stock. I am changing to ABC Capital. AB Capital, not ABC Capital, AB Capital, Aditya Birla Capital. See here you have a weekly zone is available. We have a rally base drop. Let me draw the weekly zone. Let me change the color to weekly. Where is it? Weekly supply zone. Okay. How people will be making use of this? See, currently price is closed inside the weekly supply zone. What is the use? How people will be making use of this? So this is the question may arise in our mind, right? Okay. People won't place their orders on the weekly zone. Actually, there is a concept you already learned in lesson 16, but the same concept, a little extension to that, this strategy is built. What is that? What is the concept you learned in lesson 16? Zone confluence. You have a HTF zone having confluence with ITF zone. ITF zone is having confluence with LTF zone, lower time frame zone. And when this zone confluence is there, many people will take trade based on this zone confluence. If it is a demand zone, they go for the long trades. If it is a supply zone, they go for the short trades. And these traders trade only if LTF zone is having confluence with ITF, ITF is having confluence with HTF, then only they take the trades. Otherwise, they don't take the trades. Okay, this is the weekly zone. Probably they will be using this weekly zone as a HTF zone. Suppose if monthly zone is already there, sometimes they may use a weekly zone is a ITF zone. That way also they will use. But anyway, let us focus on this. This as a reference to the HTF time frame. That means we have drawn a HTF time frame, weekly zone. Now what they do, inside weekly zone, they will identify a daily zone. So let us go to the daily time frame. Okay, in daily time frame, there is a drop, base, drop is there. It's not very great. Or you can keep drop 3 base candles and a drop candle. That way is also valid. So how you can draw a zone like this? This is a daily zone, daily supply zone. Either you can draw like this, or you can also limit it. Anyway, it doesn't, because our interest is on the weekly time frame. I mean, next lower time frame, that is 75 minutes. But before getting into the 75 minutes time frame, and if you want to take a trade, trend also should be supported. If trend does not support, we can't plan the trade. See, earlier prices were at uptrend. See here, rally base rally, again rally base rally is there. Now see, after that what happened? This rally base rally has been violated here. That means the uptrend is changed to sideways. Again rally base rally is there. This is also violated here in this candle. Maybe in this candle it is pierced, completely violated. Anyway, during this candle, the trend is changed to downtrend. If it is a downtrend, definitely it supports short trades. But here observe a problem here. You have a legging candle drop, you have a base candle, again you have a drop candle, you have a daily supply zone. Recently this daily supply zone has been violated. That means trend is changed to now sideways. Apart from bullish and bearish trade setup, there is also a sideways setup is also there, which I will be teaching in phase 3 training. In the coming weeks, one of the lessons I will be teaching you, bearish trade setup. So definitely this particular stock is currently supporting bearish trade setup. In bearish trade setup, the advantage is at extremes you get both long-term trades as well as both long trades as well as short trades. So currently we are at the supply zone. Definitely we look for a short trade. But here daily we are using for trend purpose. Then what about where you take the entry? At lower time frame. Daily is ITF, intermediate time frame. Weekly is HTF. Now you need to find a 75-minute zone that should have a confluence with the daily time frame and also weekly time frame. Because people trade on this strategy. HTF, ITF, LTF, confluence should be there. Then only they take the trade. And the trend also should support. Price direction and all, they are not aware because this is a new concept, price direction we developed to bring the success rate in our zones. So they are giving us good results with price direction. But earlier that concept was not there. People were just depending only on zone confluence and trend, that's it. Okay, according to them, what they do? Now they go to the 75 minutes time frame. In the 75 minutes, is there any zone is available? That is what they see. Yes, there is a zone is available. We have a leg candle, we have a base candle, we have a drop candle. So this is the way we can draw a zone. Which zone? 75-minute zone. See here you have now you have clarity. So you have a rally, this is a base candle, this is a drop candle. Rally, base, drop. Now let me adjust the daily zone. Okay. See, because a vertical line has come, you are not seeing this candle properly. Now this is the zone. Which zone? This is 75-minute zone. So in this zone, people will plan for the trades. But according to our rule, what you have to do? You need to fine tune this zone up to 5 minutes time frame and you need to check whether there is any good order flow is there or not. So go to the 15 minutes time frame. Inside. Look into the 15-minute zone. Is there any 15-minute zones are available here? No, we don't have a proper structure, price structure here. Just prices were going down, down, down without a 15-minute zone here. So what will happen? Definitely this zone will be violated, right? But here I am seeing a candle went there and coming down. So there is a possibility above, if any 5-minute zone is there, aggressive trade we can plan. So that's why go to the 5 minutes time frame. Inside that. See here inside, this is the 75-minute zone. So we bypassed 15-minute zone. Why we bypassed? There is no proper 15-minute structure. Still why we are drawing? By seeing this candle. Is this candle already taken a trade? Or is it not? Or is it a rejection? That is what we need to identify. So we have a rally candle. We have 1, 2, 3 base candles. And then we have a drop candle. And after that there is a move down, big move down. Now let me draw this zone. This is a 5-minute zone. This is a fine-tuned 5 minutes zone. This is not a fine-tuned 5-minute zone. This is an aggressive trade setup. And this aggressive trade setup should be supported by the price action clue. All these concepts you already learned. I already explained in lesson 21 these concepts. See here. Here prices went near to this zone. There is only a small gap. Prices went and again it moved down. That means definitely there is a strong order flow might be there in this area. Definitely this 5-minute zone is having a solid order flow. Okay, because they have a fine-tuned zone, definitely they plan a trade. But many people, what they do, if they want to plan at this 75 minutes time frame, they won't plan at 75 minutes. The reason is 75-minute zone is already tested and gave a very good return after that. So that is the reason why they avoid. But we have a fine-tuned zone. Inside this fine-tuned zone, we can plan our second trade. There is nothing wrong. And moreover, trend is also supporting sideways trend. Short trades it is enabled, and moreover, this is at the extreme level. Sideways trend, multiple trades we will get at the extreme level. Why we are saying this is the extreme level? Because this is the horizon for this entire move. And moreover, this is a fine-tuned structure. And in sideways trend, fine-tuned structures helps a lot. All these are all positive factors. See what happened? This report we generated on last Saturday or Sunday, one of these days. And today is Monday, right? The trading day that is already completed is a Monday. So during today's trading session, now already today's trading is completed. Monday's trading. See what happened today's trading session? Prices went into the zone, picked up the orders. Later on again prices came very close to this in case if you missed the trade. Definitely with some buffer you would have taken a trade. Prices came very close to the zone. Maybe you would have taken a trade in this candle at 9:30 candle in case if you missed the trade in the 9:15. But if you look into the 1 minute candle you get better clarity. Exactly which candle. So this is the 9:17 candle. Definitely you would have got a trade in the 9:17. Maybe 9:15 candle you might have missed. 9:17 definitely your trade would have been executed in this zone. See after that what happened? How prices came down. Finally at the end of the closing hour, see here. Maybe you may not be planning the intraday trade. Maybe you may plan intraday trade. Either thing, whatever it is. Some of you might have planned a DIT trade. Some of you might have planned a WIT trade. WIT is only the maximum. Why? Because the WIT maximum? Because we are taking weekly zone as a HTF zone. But is there any rule that you have to take a trade here? No, there is no rule if it is a WIT trade. Even in the 75-minute zone also you can take. Because 75-minute zone is already tested, I am going to the 75 minutes time frame. Because 75-minute zone is already tested once in this candle. Now we are taking a deep entry, a little above. There we identified a 5-minute zone. And because of this rejection, we can plan a trade from here. What is the advantage planning WIT trade like this? One advantage is definitely you get an entry because you are planning a trade a little above. At that time, if you are planning a WIT trade, you can take an entry like this also. Let me draw a horizontal line. You need not go up to fine-tuned area. Okay, today luckily prices entered inside that. Sometimes what happens? Prices may not enter inside this. They may reach this blue color line, again it will come down. That possibility is also there. If you are an intraday trader, you have to wait until prices are reaching up to 5 minutes. You don't have option because you are an intraday trader. But if you are a WIT trader or you are a DIT trader, just before entering into this, mostly you will take a trade at 75 minutes time frame or 15 minutes time frame. Anyway, 15 minutes is not here. Mostly you will be planning this as a WIT trade only. Weekly income trade at 75 minutes zone you will take the entry. earlier prices went a little deep inside, you will take, or maybe at the previous where prices went at that level, the blue color line I have drawn. Definitely prices will reach because their strong order flow is there. You may take a trade at blue color line also. Provide risk management. Your risk should be supported. Your maximum accepted risk is 2%. Beyond 2%, you cannot take the trade. Or you can do position sizing and you can take the trade. But anyway, today prices went up to this fine-tuned area and then again it came down. Do you know how much it has come down? Let us calculate intraday point of view. Those who are holding, probably prices may go. Because you took entry at 75 minute zone, probably your exit also might be at 75. This is your 75 minute zone. Is there any next 75 minutes demand zone? Here you have a 75 minutes demand zone. That means your target is also reached today itself. So you are a lucky guy. You got an entry in the 75 minutes. Your 75 minutes exit is also completed. And this 75 minutes demand zone is already tested. Definitely this zone will be violated. Maybe till next 75 minutes it may reach. Here you have a drop, base, rally is there. Probably this is the next 75 minutes will be reaching. Maybe tomorrow prices may go up to here. But today, what was at least till the closing, how much opportunity it has given? Assume you have taken a trade at the 5 minutes entry. That is a 233.30 paisa. Let me take a calculator. What is the close of this candle? 226. Today you would have got 7.3 rupees profit. Suppose you have taken one futures short, how much you would have got the profit already? This is AB Capital. What is the lot size of 5,400 rupees? Into 5,400, you got 39,420 rupees profit during intraday itself. During intraday itself you got the profit. Until the close of this candle, I am just calculating. Maybe if you would have exited, at least 30,000 rupees profit you would have got, around 30,000 rupees. Or maybe a little above 30,000 you would have got. If you would have exited near this zone. I mean at the proximal line of this demand zone, target zone. So it's an excellent trade, right? This is how, but anyway, we calculated intraday. They will be holding. They might be holding till the next. Because it already reached, today itself it reached the 75 minute zone. They would have exited today itself. They would have booked the profit. Or partially, if they would have taken multiple lots, F&O lots, they would have exited. Few lots. And a few lots might be keeping, maybe hoping that more profit till the next zone. But at least immediate 75 minute zone it reached today. And what is the strategy we use? It is zone confluence at higher time frames. And this strategy people will be using for DIT trades, they will be using for even HIT also they will use. HIT also it is an effective. WIT they will use weekly income trade, MIT they will use monthly income trade. This strategy can be used in any income trade. But only rule is only in the higher time frame only they will take the trade. How they take the trade in the higher time frame? In the having zone confluence in the lower time frame, within higher time frame they take. Your lower time frame should have confluence with intermediate time frame. Your lower time frame and intermediate time frame both together again having confluence with higher time frame. When such kind of zones are available, then only they take the trade. Anyway, I will be explaining this trade setup in the upcoming sessions in our advanced strategy. Actually, advanced strategy is about discussing all these strategies, how people are using different trade setups. So far we just completed HLQ setup, we completed. And all this setup, sideways setup you have to learn. This zone confluence setup you have to learn, that is HTF, ITF and LTF together. Further, until 5 minutes, why you are doing is to confirm whether order flow is there or not. If order flows are not there, mostly the zones will be violated. Because you already learned when a zone will be violated. It is a new concept we developed. 80% scenarios, we are in a position to tell when a zone will be violated. When you know the zone will be violated, we don't take the trade. But many people are not aware of that concept. That's why what they do, the 75 minutes and a daily zone and weekly zone, they will check whether all the three are having confluence or not. If confluence is there, blindly they take the trade. But we are not doing that. Because already I defined the checklist in lesson 20 in our training videos. You all must use that. Whether it is a WIT trade, whether it is a MIT trade or DIT trade, in any of these three trade setups, 5-minute zone should be available. 5-minute zone is available not for taking the trade. To confirm the zone is having order flow and it won't be violated. Sometimes it will violate, but the chances are less. If order flow is there, there are higher chances for getting success. But you are taking trade in the fine-tuned 5-minute zone, or taking the trade in the 15-minute zone, or taking the zone at the 75-minute zone, that is up to you. That is all depending on your risk management. Those risk management concepts also I explained in lesson 16. Lesson 16 I explained multiple concepts. One is risk management and another one is when a zone will be violated. If you did not listen lesson 16 properly, you will be always making mistakes. You will be always be getting several doubts. Even though I explained all the concepts in lesson 16. I clearly told you in a WIT trade setup or MIT trade setup or what is the other one, DIT trade setup. There is no rule that you have to take a trade in the fine-tuned 5 minutes zone. There is no rule. If it is a MIT trade setup, you can take a trade in the daily zone itself, provided risk is within your limit. If risk is not within your limit, one of the fine-tuned zones you will take. There is no rule again 15 minutes. Probably from daily you will go to 75. 75 level you take an entry. Why? Because in bullish trade setups or bearish trade setups, their trend is very strong. The trend may not let the prices reach up to the fine-tuned zones. Before reaching fine-tuned zone itself, prices will reverse and again they move. That way you will be missing the trade. Only risk is very high. You should go to the next fine-tuned zone and you can take a trade. Next fine-tuned zone is also not accepting your risk. Then you may go one more time frame down. And in that fine-tuned zone you take the trade. Let me show you here. Suppose in this 75 minutes you want to plan a trade. But risk is high. What do you do? Inside 75, okay, in this stock 15-minute zone is not there. But in the other stocks maybe 15 minutes fine-tuned zone will be there. There you take the trade if this risk is high. You may ask a question. Suppose there are higher chances the trade just touch the 75-minute zone and it will go up. But what you can do? Nothing you can do because your risk is high. You can't take a trade. If you miss the trade, you accept. You can't do anything for that. The only other option is position sizing is there. You can do position sizing and at 75 minutes level you can take the trade. If you feel because of position size you are getting very few stocks, at that time what you can do to buy more stocks, you take a trade in the next fine-tuned zone. Instead of 75 minutes, the 15 minutes zone level, you take a trade. But fine-tuned 5 minutes should be there. Why fine-tuned 5 minutes should be there? Because to confirm the zone is having a strong order flow. Not for taking the entry every time in that zone. See here, if you look into this candle, does it enter into the fine-tuned 5 minute zone? No. Before entering into the fine-tuned 5 minute zone, the prices came down and moved down. Actually, it is not a fine-tuned 5 minute zone. It is an aggressive trade setup. But sometimes you will see such kind of candle. There might be a 15 minute zone. The price may not reach up to the 15 minute zone, and also it will not go up to fine-tuned 5 minute zone. Before itself it will turn down and again it will move down because it is a short trade. It will turn and move down. And if you are waiting for a trade in the 5 minute zone, you will be missing the trade. So that's why it is very important. But anyway, this trade is an aggressive trade because of this price action, this particular price action. If you take this ABC Capital on this day, definitely you would not have taken a trade. Why you would not have taken a trade? Because there is no 15 minutes order flow and we don't have a fine-tuned 5 minute zone. We are thinking that this zone will be violated and we didn't plan a trade. But this price action gave us a clue. That's why next time means today we got a trade opportunity. From the fine-tuned 5 minute zone, prices came down and moved here. But for this entire success, see, it gave you how much profit already intraday? 39,420 rupees. That means almost close to 40,000 rupees profit it gave you during intraday. What is the reason? The reason is because of the strategy you are applying. What is the strategy? Zone confluence strategy. The zone confluence strategy you are mixing with different income trades. Monthly income trade, weekly income trade. So to support this strategy, every week we are publishing weekly reports. In the weekly report, I am publishing stocks closed inside the zones and also stocks near the zones. Because only weekly ones I am publishing. If stocks are near to the zone, you just keep them in your watch list. Anyway, every day also we are publishing stocks. We have other report. Stocks near demand and supply zones for all the time frames. There also you have stocks near weekly zone, monthly zone. Those zones also, everyday zones also, you will keep in the watch list. But the only point you have to understand, prices won't react very fast at weekly time frames or monthly time frames. Unless some huge change happen in the market. So that's why the stocks near weekly demand zone, it will definitely take some time to get into that zone. Sometimes 2 weeks, 3 weeks also it will take to get inside the zone. If that is the case, some of the zones which are already there inside the zones, if you don't look into those stocks, you will be missing these trade opportunities. That's why every week I am showing you the list, stocks closed inside the zones also, weekly zones. Every month I am showing you stocks closed inside the monthly zones. Because people who are already aware of the zone confluence strategy, they are making use of this strategy and they are getting benefited. Because their trading style is only based on zone confluence. They don't take any other trades. Why they don't take other trades? Because see, earlier days the softwares are not available. Today we have a software. Our software is having capability to list this zone confluence. So far I haven't exposed this concept to you guys. In NeoStock software we have a facility. Based on the zone confluence, it will filter the stocks. For any time frame I can find only those stocks having LTF zone having confluence with ITF zone. ITF and LTF both is having confluence with HTF. Such kind of stocks will be listed by our software. I remember earlier one of the videos, once I have shown this, but at the time you people didn't completed the courses, most of you people, you might not have understood that. One of the videos I have actually filtered such kind of stocks. Earlier I thought all you people are having already completed supply demand zones. I thought of showing you the power of NeoStock software. But because you didn't have any knowledge on supply demand zone earlier, none of you are able to understand this. Only few people already completed the courses. Probably their number is hardly 4 members or 5 members. Single digit only. Today those people are making use of this weekly report. Hope you are understood the real power of why every week the reports we are publishing are very, very important. And in your question you asked one more question. What is that? Okay, near because we are waiting prices to enter inside. That's why near also we are monitoring. Anyway, inside zones only, we just took inside the zone. AB capital is price closed inside. See, so actually we published this report on Saturday or Sunday. Okay, anyway, weekend we published this. But today, in the Monday trading, we got an entry and it gave you 40,000 rupees profit. That means those who are using this our software and those who selected ABC capital, they would have got 40,000 rupees intraday profit today. And you asked why PSR zones. PSR zones purpose is different. We don't use PSR zones for trading point of view. PSR zones are only for finding traps in the charts. That I already how to use PSR zones, I already explained. In case if you are not aware of how to make use of PSR zones, what you can do, you can go to our NeoStock in our channel. We have a playlist. Go to this playlist. In this playlist, you have a playlist called Important Strategies and Analysis Videos. Actually, everybody should go through all these videos. All the important videos only I kept here. See, in our channel, so far we have 544 videos are there. In that, half of the videos are HLQ analysis videos, or maybe at least 200 plus or 250 plus videos might be there, HLQ analysis videos. From that, some important videos I kept it here. Not only HLQ analysis, few other videos also, some special videos also I made. Go to this playlist. The initial stage, before starting the course, I made a video, important concept PSR zone. See here. From the bottom, it is second, third, fourth one. From the bottom of this list, the fourth video, important concept PSR zones. So go through this video. What is the real usage of these PSR zones? Why I introduced this concept, PSR zones? I think regular supply demand zone price action, there is no specific concept PSR zones. I have introduced this concept because I developed the software. During the development of the software, I understood the importance of these zones. PSR zones should not be used for trading purpose. They should be used only for identifying the traps. Those traps will be having a strong order flows, and they will act as a high liquidity zones. And good profits we get. So please go through this video, you will understand. Anyway, it is a short video, only 13 minutes only. The length of this video is. So without any skip, listen this video. You will, not only you, whoever is attending this Q&A session, listen this video. I am not addressing only to this specific person. I am addressing this to everybody. Because same question, at some point of time, you will also get this doubt. That's why I am making in Q&A, rather than answering this question to this specific person. Okay, now let's move on to the next question. Next question is about, thank you very much for the zones. Today I tried to set up MIT, monthly income trade, WIT, weekly income trade, but couldn't gather confidence during analysis. Few questions that I clouded my mind are, the first one, entry for MIT. Should I enter at daily zone or at 5 minutes fine-tuned zone? Probably you would have got this answer in the earlier question itself. Earlier question I clearly explained. You will not wait until this fine-tuned zone. Okay, because this is the second trade, we went inside this. If not up to, even though it is second trade, still sometimes you won't go. That's why I have drawn the blue color line. Previously the order flow went up to this. Probably there itself you take. Sometimes what happens, prices just touch that, again it will come down. They will not reach up to this. If the order flow is so strong. Okay, probably this is the last attempt. Next time this zone will be violated. Because 5 minutes order flow, it picked up the orders, reached up to this next 75. So this 75 minutes is entry zone. The next 75 minutes is target zone. But luckily that target reached during the intraday itself. So that's why there is no rule that you have to wait until fine-tuned 5 minute zone. When you have to go to fine-tuned 5 minute zone, if you feel your risk management is not satisfied, that means taking an entry earlier, your risk management is not supporting you. At that time only you go to fine-tuned area. But many times prices may not go up to fine-tuned 5 minutes area in bullish and bearish trade setups. Before entering into fine-tuned area, they may come down. Sometimes they will go up to fine-tuned area. That strong order flow will push the prices. If it is a supply zone, it will push down. If it is a demand zone, it will push up. So you got the clarity. So in MIT, there is no rule that you have to take an entry at fine-tuned 5 minute zone. You will take trade in fine-tuned 5 minute zone in MIT or WIT or even DIT if your risk management is not allowed, not satisfied, or not supporting. Maybe not supporting is the right word. If your risk management is not supporting, then only you go to fine-tuned 5 minute zone. Next question is very important. Stop loss. Stop loss should always be the distal line of your lower time frame zone. Lower time frame zone is the entry zone. If you look into the previous one, where is your lower time frame? 75. The 75 minutes distal line is your see, this 5 minute zone is a little below the distal line of 75. So you have to keep your stop loss at your entry zone's distal line, not the fine-tuned zone's distal line. But still you can use fine-tuned zone's distal line in special scenarios. I will tell you what is that special scenario. Suppose you want to take a intraday trade. 5 minutes is your entry. Next 5 minutes zone is your target zone. Let me show you. Is there any 5 minutes zone here? Yeah. You have a rally, base rally. You will be keeping this as your intraday target. This is the place you take an entry, and once prices reached here, you will exit. You may ask a question, why not 15 minute zone? Because this is an intraday trade and not a high liquidity zone strategy trade. This is a normal zone only. If it is a normal zone during the intraday, the next immediately available opposing 5 minute zone you will be using as a target. This 5 minutes is your entry, this 5 minutes is your target. In this case, this 5 minutes distal line is your stop loss, not the 75 minutes or other time frames. If you are taking a trade, a 75 minutes trade, at the time you will keep 75 minutes zone as your stop loss. You may take a trade at 75 minutes level, you may take a trade at deep in the middle, or you may take a trade at the fine-tuned zone. Wherever it is, entry you are changing because of your risk management point of view. But stop loss you cannot change. Stop loss should be 75 minutes target distal line because your entry zone is 75 minutes. But if you are taking an intraday trade, for your intraday point of view, you are not taking trade at 75 minutes. You are taking trade at 5 minutes. For that 5 minutes distal line is your stop loss, not the 75 minutes. And also 5 minutes opposing zone is your target. If it is a high liquidity zone, 15 minutes you will target. That is a different strategy. HLQ strategy is different. But otherwise, the remaining zone, see, before you get into this NeoStock training, you may not be knowing what is a high liquidity zone. For you, every zone is a normal zone. There is no high liquidity zone. It is just a demand zone and supply zone. But within the demand and supply, you never categorized them as high liquidity zones. Because we identified the order flow, where it is having strong order flow based on our software algorithms. Now we are in a position to identify high liquidity zones and normal zones. Normal zone means your regular demand and supply zones. So that's why, as per your, without this high liquidity concept, your entry is 5 minutes, target is also your 5 minutes only. So that's why don't mix your 5 minute zone concepts with 75 minute zone concepts. 75 minutes zone distal line is 75 minutes zone distal line only, not 5 minutes distal line. When you are planning a trade in 5 minutes and you want to keep your distal line as a 5 minutes distal line, then that is a purely intraday trade. Not a MIT trade, not a DIT trade, not a WIT trade. Hope you got the clarity. Next question. Should the risk be maximum 2% in this case? Risk management 2% is common for all the income trades. Any income trade you take, risk management should not exceed, because it is on your capital. It is not, risk management is not about the income trade specific. Risk management is about your capital, your investment specific. You never, I clearly told in lesson 18 or 19, I didn't remember one of these lessons. I clearly told you should not risk more than 2% on your capital. If you risk more than 2%, if something wrong happens, you will be losing only 2% of your total capital. So still you will be in the market. If you are just like that increasing, and if your stop loss is hit, you lose maximum money. Next time when you want to trade, you may not be having enough capital. You will be completely out of the stock market. That's why don't get confusion. If you are having any confusion, please go through the training lessons once again. Because I have explained all these concepts in detail. Because many times what happens, the video lengths, training video length is sometimes they are big. We skip the videos and we learn. That way you will be missing important concepts. The video length is more means you have to learn all the concepts. You should not skip. Maybe I would have splitted the videos into 3 parts and I would have published then probably 3 videos, and each video length would have been only 15 minutes or 20 minutes. I can do that. But this is only a psychology related impact, right? I want sincerely sit on that particular and complete that particular, whether it is 2-hour session or 1-hour session. Sincerely I want you to attend. Why didn't split? Because I want all you people completely focus on that video without any breaks. Because it is such an important. Sometimes when you take a break, the continuation might be missing. You have to understand. Training videos you should never compromise. Other videos you can skip, but not the training videos. Now hope you got the clarity for all your questions. In case if you feel this 2% risk is high, you have 2 options. One option is you go to wait until the fine-tuned area prices comes. In case if they come, then only you take the trade. Either 15 minutes fine-tuned area or 5 minutes fine-tuned area, one of these levels you can take a trade. But why we are looking for 5 minutes fine-tuned zone? Not for trade point of view, to confirm there is a sufficient order flow so that the zone won't be violated. At least 80% it will work. 20% it may fail. Nobody can, we are not God to tell 100% it will work. At least 80% level, The zones having 5 minutes, fine-tuned zones, they are working very well, 80% level. For that confirmation, we are identifying fine-tuned 5-minute zones. Hope you got the clarity. Fine-tuned 5-minute zone is not for entry. That is only for intraday trades only. Fine-tuned 5-minute zones we will use. But in DIT trades or WIT trades or MIT trades, you never use fine-tuned 5-minute zones as an entry point of view. Only if risk is not permitted, at the time 5 minutes level you will use. Still we keep our stop loss as a distal line of the 75-minute zone if it is a WIT trade, or distal line of the daily zone if it is a MIT trade, or distal line of the 15-minute zone if it is a DIT trade. Hope you got the clarity. Now let us look into the next question. Last question. WIT weekly income trade, IPCA lab, Britannia given trade and made good profits. Very good. Congratulations to you. But DIT, Coal India, Sale, PFC given trade and got stop loss. So that means today DIT trades did not work properly, but WIT trades gave you good profits. Means MIT or WIT is always better than DIT. That's a wrong statement. First of all, you should understand when zones will be failed. That's why, without knowing that concept, we are making statements. Everybody should understand this important point. When a zone will be failed. Because we are taking these DIT trades, WIT trades or MIT trades, these are all bullish or bearish trade setups. That means they are supporting the trend. Because you already learned trend is your friend. As long as your trend is your friend, whichever the trade setup, it will work. But when they will fail, even though they are supporting the trend, one day some of these stocks will fail. Maybe today is such kind of day for your DIT stocks. That's why all the DIT stocks are failed and you are making a conclusion, okay, DIT stocks will always fail. No, it's not like that. You have already seen previous weeks DIT stocks gave very good profits. Some of you captured those profits. Even if you put them in your comment sections. The DIT stocks has given excellent trades. I still remember one day there were no high liquidity zones. I think only one zone was there. And on that day, some of you took trades from DIT stocks. Got very good profits. Except one stock. Remaining all stocks gave profit on that day. One of you put them in the comment section. But why they worked on that day? But why they did not work today? This is what you should understand. Actually, I already gave these answers in some of our analysis videos, earlier HLQ analysis videos. But anyway, in Q&A video, now this point will be registered. Whoever is referring the Q&A lessons, now they will remember this point. See, the trend shift will take place one day. What is that one day? Can we find that? No, you cannot find. Only after trend shift only you can find. Trend is changed. Because until that, trend is your friend. Do you know when the bend will take place? Trend is your friend until the bend. Bend means the curve. That is called trend shift. Can you tell when the trend shift will take place? No. After the bend only we can tell there is a bend. There was a bend. There is a bend or there was a bend. Only it should take place, then only you can identify. Otherwise, the trend will be continuing further and further. And today, such kind of bend happened. The trend shift. In which time frames? In 5 minutes time frame as well as 15 minutes time frame. Anyway, 5 minutes time frame, trend we won't be using unless you are using 1 minute zones. But otherwise, ours is the last income trade is HIT, hourly income trades. In HIT, 15 minutes is your 15 minutes time frame is your trend, your ITF time frame. See today what happened? Let me go to the Nifty stock. Already I explained in the Nifty analysis video today the same point, but still this is Q&A session. This has to be registered for future reference. Let me go to the 15 minutes time frame. This was yesterday we talked about this zone. We have a rally, 3 base candles are a rally. I told you yesterday, in this zone we will get a trade. If this zone is violated, trend will be changed to sideways. That is what I said. But today what happened during the market? One more supply zone is created. You have a rally, base, rally. That way you can treat. Or rally, 1, 2, 3, 4 base, 5 base candles, rally. That way also you can treat. So this is a leg candle. You can say leg in. Because completely body is more than 75%, you can say leg in. And this is the base candle. You have wicks are there, maybe probably body could be less than 50% or maybe a little, around 15%, 50%, a little over. So this is a base candle, and then you have a rally candle. This is the first 15 minutes zone. In this 15 minute zone, even if you consider this is rally, 1, 2, 3, 4, 5 base candles rally, either way, it doesn't make any difference. In this candle, this zone is violated. When this zone is violated, your 15 minutes trend is changed to sideways. See, after that what happened? This is the one we discussed in our yesterday's Bank Nifty analysis video. Because today during the market this dynamic zone was created, now trend already changed to sideways. Now rally base rally, this is pierced. Pierced means violated only. Zone is violated only. Why we are keeping pierced? To identify any traps and all. But otherwise, this is also a violated zone. What does it mean? The complete order flow has been consumed in this zone. There is no more institutional pending orders. That means the zone is violated, no more useful. Now because this zone is also violated, now trend is changed to downtrend. So this is one of the reasons why the trend shift took place. Hope you got the clarity. The same way in WIT trades, 15 minutes is our entry, 75 minutes zone is our ITF. So in those zones, probably the 75 minutes trend shift also might be taking place. That's why one of those 75 minute zones are violated. That's why your trades are disturbed today. It is stopped out. If your 75 minute zone is violated, then only trend shift will take place. Because today the trend shift is taking place. Already they are confirmed in 5 minutes time frame. Already they confirmed in 15 minutes time frame. Probably in 75 minutes time frame, some of these stocks already the confirmation might have been happened. That's why you missed some of these trades. Because on all these stocks, the trend shift took place. Probably these stocks might have changed to sideways now. The trend is changed to sideways by violating. So unfortunately, your trades are on these violated zones. Based on that, you are making a conclusion that the MIT and WIT is better than DIT. That is a wrong statement. There is no question of which is better, which is not better. Maybe in the coming days, there is a possibility WIT, MIT trend also might take place, the shift, who knows? We never know when trend shift will take place. Maybe tomorrow market recover, it will go up. Or the trend shift will continue, and probably in the coming days you may see in WIT zones will be violated. Later on monthly zones will be violated. At the time you see a huge, bearishness in the market. One day it will happen. What is the guarantee that one day is not the current market sessions? These coming days, next few days. What is the guarantee? We cannot predict, right? Anything will happen. Until that time, what you have to do? Once the trend shift takes place, you have to take the opposite side trades. Maybe you may take long trades in WIT and MIT. Now from now on, so what you do? You will take short trades in DIT or short trades in HIT because their trend shift are already confirmed. So they have given you short trade opportunities. You may ask a question, then why can't we take immediate? We will also get WIT opportunities, MIT opportunities. But you have to observe WIT opportunities and MIT opportunity. That means monthly income trade, weekly income trade opportunities you won't get every day. Every day you will get HIT opportunities. Every day you will get HIT opportunities. The trade might be successful or stopped out, whatever it is, you get an opportunity every day. But DIT also almost every day you will get few opportunities, few stocks. DIT also you will get. Not as many as how many stocks you got in HIT, not that much, but definitely few stocks you will get. Because we have the software, those few stocks we are in a position to identify. But in WIT, you won't get every day. Maybe weekly once or twice you will get the WIT opportunities. Exactly the same way, MIT opportunities you may get every day. MIT opportunities maybe maybe 1 week or maybe 10 days. Or maybe 2 stocks in a week or maybe 2 stocks in 10 days. That way you will get MIT opportunities. Because you are having software, you are able to identify those opportunities. Manually if you are doing, it is impossible for you to identify, because you see people who land supply demand zones, they will be waiting patiently, they will be waiting weeks and weeks. They analyze a stock until prices reaches. It may take weeks time, several weeks time until prices enter into their analyzed stock. That day they will take a trade. After so much of waiting, after taking the trade, if the zone is violated, you know how much painfulness it is. Today you people are enjoying because you have all these software reports every day. But I know many people didn't understand the importance of these reports. That is a different story. If I give you a strong weapon, you should also have the capability to use that weapon. Otherwise there is no use in providing you those strong weapons. But today some of our people are already building those capabilities and you are using, because you are asked this question means you are using these capabilities. While using these capabilities, now you got some uses of these capabilities, some doubts you are getting. That is good. Now you are learning from, because the moment you ask the question, then only I can provide your answers. Sometimes I may not be knowing what kind of doubts you are getting unless you ask. So that's why never keep, never mark a stamp with your conclusions. First you should understand how to use. Maybe today they hit the stop losses. Tomorrow they will be giving you short trade opportunities. Which one? The DIT stocks. That day you will get the profit. What is the main advantage of supply demand zone? The day when you get this, your trade is stopped out, your loss will be minimal. That is within your risk accepted level only. But the day when you get the profit, you will get 4 times, 5 times profit you will get compared to the money you lost, because you are using RR, good RR. Those points you should not forget. You should not expect that every trade should be a successful trade. You have to see overall within a week, these many stocks, trades I have taken. What is my overall, whether it is the gain, is it a gain or is it a loss, you have to see. That way you have to make conclusions. Hope you got the clarity. So never say that is the best or this is not the best. It is all happening because the trend shift is taking place. That way it is failed. You will see on a day, all MIT trades or all WIT trades might be violated. That is also will happen. That day again you should not make a statement. WIT and MIT trades are not better and DIT trades are good. We should not make such. Because that day when these MIT trades, WIT trades are violated, on that day your DIT trend will be probably downtrend. Short trades you might have taken that day. The short trades would have given you good short opportunities. Good returns they would have given you. Why you got good returns on that day? Because market is drastically down on that day. That's why on that day your MIT zones and WIT zones are violated. So before MIT WIT trend changes takes place, lower time frame trend changes will takes place first. Always remember, first trend changes will start from 5 minutes time frame. After that the trend changes will continue in 15 minutes time frame. If the down move continues, next 75 minutes will be violated. Even the down move further continues, next daily zones will be violated. After that weekly zones will be violated. This is what the fact you have to understand. But such kind of violation until the weekly time frame and monthly time frame may not happen regularly. Because higher time frame zones, these changes takes place slowly. Lower time frame zone, the changes happen quickly. But if you think this MIT and WIT is better, what you do? You will miss the short trade opportunities that they are providing tomorrow on DIT trades or HIT trades. That way you will miss a great trading opportunity. See, if you want to become a good trader, you should not feel I am a MIT trader or a WIT trader or I am a DIT trader. You should not think like that. Whichever the trade you are getting opportunity, you have to grab that opportunity. One stock it will give you a long trade, another stock it will give you a short trade. Depending on the trend, a trend changes. You have to grab the opportunities. But one day during the trend shift, definitely your zone will be stopped out. On that day you have to accept the stop loss. But you should not make a statement saying that that is good and the other one is not good. That day trend shift took place. That is what your mind should accept. If you are not accepting the trend shift, you didn't learn the concepts properly. The trend changes. Clearly I told in lesson 7 or lesson 8. I didn't remember, but one of those lessons. The trend. I clearly told, trend is your friend until the end when there is a bend. Just to make you people understand what exactly the bend, what exactly the end. After my first video on the trend, continuation to that, some more extension videos I released in our training course. In those videos, I have explained what is a bend clearly. But I have seen, by seeing the view count, many people skipped those extension videos, thinking that okay, you understood trend concept, everything. No, you didn't understand the trend concept. That's why I have provided the extension videos to make you understand what exactly a bend means, what exactly a friend means, what exactly the end means. Everything I explained. Listen those videos, then you will get clarity. And also please remember, none of us can predict when the bend will take place. Once the bend is completed, then we can tell there is an end to the trend. Nobody can tell that when there is a bend. But on that day, all our analysis will fail. On that day, our stocks will be stopped out, whichever the time frame it is. Today you have seen in the daily time frame, in DIT income trades you have seen today. But tomorrow the same thing you may see in WIT trades. One day you will see that. That day you cannot make a statement. WIT trades are not good because they are violated. First understand the meaning of the trend shifts. Trend shift means actually it is a great opportunity for you to go for the opposite side trades. Now till today, 5 minutes and 15 minutes, it's very good for bullish trades. Now today what happened in both those, the trend shift took place, completely went to the downtrend. Now tomorrow we will be getting a great opportunity for short trades. That way you have to see when there is a trend shift. Because today some of your stocks are stopped out, you cannot make conclusion and you cannot get disappointed. Stopped out means it is an opportunity for you to get trades on the other side. That way you have to understand. And that day the loss you have to accept, because the risk you are already accepting. The risk is minimal, right? You are already fine tuning the zone, minimizing the risk. Within the accepted level you are minimizing the risk. Then only you are taking the trade. But it is stopped out. Accept that risk. Risk is very small. Your capital is not disturbed. Still you are in the market. And tomorrow whatever the loss you got today, tomorrow that will be recovered. Today you lost your trade opportunity in the long trade opportunity. Maybe tomorrow short trade opportunity will give you good profit. As a trader you have to think like that. This is one important quality every trader should build. Then only you will be a good trader. We should not bring our emotions based on the failures. This is the biggest problem is when something is stopped out, a trade is stopped out, our emotions will come out and that way we will make some wrong conclusions. Never do that. When you get a profit on a day, when how you smile, the same way you have to smile the day when your trade is stopped out. Why you have to smile? You have to smile because you should feel proud that you minimized the risk and you got a very small loss. You should feel proud that other people would have made a big losses. But today you didn't make big loss because this day is a trend is shifted. Still you are come out of that particular incident with only minimal loss. That means still you are in the trades. Still you are in the market. When you will be out of the market, when your capital is completely disturbed. But still you protected your capital with minimal loss. That's why you have to smile. If you understand this point and if you build such kind of psychology, and that is all the small things you don't really bother about that. And immediately you just change your mindset and you will plan for the trades in the other side of trend direction. Today you are taking long trade, tomorrow you have to go for short trades. But also I want to warn you people, now market is in the elections. Now currently election season is running now. During the election season, volatility will be very high. That is what I already told you. See, today you have seen a trend shift. Maybe tomorrow again trend shift may take place. Once again the bearishness will change to bullishness. Generally these shifts won't happen like that. There will be some duration. But when volatility is very high, during certain important events, the volatility is very high. During a high volatility, what happens? Trend shifts takes place quite frequently. That's why you should be very careful until the elections are over. People may tell why today market is down, different reasons they will tell. Forget about the news. The only point you have to keep in your mind, volatility changes. This is expected. I've been talking about these volatility changes from starting of the May month, and we witnessed all these volatility changes. Clearly, I have seen the impact on the high liquidity zones. Prices are not nearing to the high liquidity zones. You have seen for the last 15 days, hardly we are finding one stock in a day. Today we found 3 stocks. This is extraordinary today. Actually, in general, we find demand zones and supply zones, both. Different time frames, daily and 75 we get. But nowadays, they are limited to only one time frame. One stock means obviously it is limited to one time frame. That itself is given a clue, clear clue. Because institutions don't want their higher order flow should be disturbed. That's why they are just moving in between. One day going up, one day going down. When such kind of volatility changes are happening, mostly the 5 minutes and 15 minute zones will be impacted. Intraday traders and short-term traders like DIT traders, the impact will be more. More impact will be there. Of course, DIT traders and WIT traders also impact will be there. Because they might have taken a trades, the trades are struck up and the prices won't be reaching their target zones. If any options traders are there, especially options buyers, they suffer a lot due to the time decay. So anyway, I don't want to get into the options. I am not an expert in that. But at least minimum expected point should be clear for you guys. So that's why until the elections are over, you take your trades wisely. Do not make any statements or conclusions on the concepts you learn. You learn a powerful concept. That point you people should understand. By this time you might have understood. Without understanding the overall market conditions, if you are planning your trades, definitely it will be disturbed when volatility is very high in the market. I mean, volatility changes are high. Not volatility is high. Volatility changes are high. There is a difference between volatility is high and volatility changes are high. Okay, let's take a break here. Let's all meet again in our next session. Thank you. Hope you got clarifications for all our questions. Thank you.